All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for September 29th, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 496. My name is David Cosmeter. I'm the creator of TimingResearch.com, and you should see my screen right now, but we'll switch off to other charts throughout the episode. Today, our special uh, I've arranged for a great panel as usual, but we have a special guest. Price Headley is on for the first time. He's been on other timing research events, but it's the first time on the panel. So welcome, Price Headley of BigTrends.com.
Thank
Welcome,
you,
Brian.
David.
Also,
Glad to join you all.
yeah, great to have you here. Also Norman Hallett of TheDisciplinedTrader.com and Sonny Harris of MoneyMentor.com. And Jim, the option professor of OptionProfessor.com, is back to moderate. So I'm going to turn it over to him.
Okay, sounds great, David, and welcome everybody. We have a lot to talk about today because the markets have been very, very volatile, not only in stocks, but oil, as well as Bitcoin, crypto, and many other things as well. We had a big buyout with EA today, so it's going to be a lot to talk about here. And we're entering in the end of the month tomorrow and the end of the quarter. So there's going to be quite a bit to look forward to in October. We've got the jobs number on Friday. We also have got a lot of things happening as far as earnings starting in October, particularly October 14th when the banks start hitting it. So there's going to be lots to discuss here today. Before we get started, I was going to do just ask you guys where you think we're going here as far as S&P is concerned. You know, today we opened up, then we went down, and then it closed on the front foot here today. So start out with our newest member of the group here, Price Headley. Price, what are you seeing here on the S&P? Not only in the shorter term, in the next month or so, and maybe between now and year end.
Thanks, Jim, and great to be with you all. I mean, what we've had is an amazing situation where the market has gone up despite every kind of worst case scenario, every bit of bad news thrown at it, going way back to when the bombs fell on Iran, and ever since with all the worries about tariffs, all the worries about everything, every pullback that we've had has been a buying opportunity. What I like to see is kind of a quick little snap down type of a pullback like we had last Thursday, where we snapped up real quickly off of that over the past couple of sessions, and it just looks like a market that wants to kind of have that slow grind. That's actually what you want as a trend trader, is the slow grind. Everybody thinks they want the melt up, the verticality, but what happens in the broader market when we get into that verticality is that it tends to be sort of climactic and then lead to a long deader period or worse. So I'm loving the kind of slow, steady march, and basically looking at essentially just expecting when you buy those retests. And my definition of retest is I like to watch the Williams percent R indicator. I use a 30 bar setting. We had a kind of a classic pullback under what most people would consider to be an overbought level out of the bottom 20% of readings last Thursday at the low. And I said, that's your key, like little flush. We've had multiple of those flushes. Again, not in front of my chart right now, but basically saying if you go back and look at each of those little flushes where it looks like it's coming
Yeah,
out of that overbought range, you
yeah,
buy those dips. And then basically sometimes you're wrong. Sometimes if it closes below that low from Thursday, I'm out in any future day. I'm just talking daily charts here today, just thinking
yeah,
big picture. But
yeah,
basically you buy those dips as re-entry points. And that's one of the hardest things, I think. I don't want to hog up all the time here. I want to hear what our other guests have to say too, and fellow traders.
yeah.
But the hardest thing, I think, is to for people to realize that, hey, where do I get back on a trend in motion? We can all see it's been a monster uptrend
Yeah.
generally off of the April lows, right? So it's like, well, where do I get back in if I missed the first leg up? And so those retracements is where I consider a really ideal risk reward. And then I usually will trade the first half of my position back to the old high, and then basically usually just put a trail on it again underneath that next retracement point when we get another retest. So whether I use percent R, I use the DMI lines, the classic 14 bar directional movement lines is another key little test, which not just the S&P, but the Qs have been beautiful on here lately. And so my
Yeah.
basic premise is, yeah, we bounce back to maybe a percent or two above the recent highs, then we get another flush, and you kind of keep trading it back and forth that way rather than just becoming a buy and holder.
Yeah. Sell the strength and then buy the reversion.
Exactly,
Yeah.
especially in this market where we've run so far.
Yeah. And basically, being at the options, obviously that you got to trade the premiums, and the premiums get skinny on the dips and they get fat on the rallies. So you kind of have to dance with that kind of situation.
Yes, and what I'll do in that situation is I like to buy them a little in the money when I buy a leg, and then I like to sell them a little out of the money, maybe back at the old high strike prices, whether you're looking at the SPY, the Qs, or any individual stock. And so that way, when you've got your dip, sell your strike up at the recent highs. And so
Yeah.
it's likely going to test those highs, but probably may not get through it that much. So that's a nice way to sort of offset the time risk in options by buying in the money, selling usually a strike or so out of the money.
Yeah, like legging into the call spread type thing.
Exactly, or even just
Yeah.
quickly putting it on where you're taking advantage of, and usually you can do it for at least intrinsic value, maybe even a little bit better than below intrinsic when you're selling that slightly out of the money option. That extra push of time will basically, you can offset your in the money options won't have nearly as much time comparatively as a percentage of the total premium.
Gotcha. Hey, Norm, what are you seeing here in the S&P here? Are we going to do like a lot of these Elliott waivers we're talking about, where we're going to rally up here into 67, 6,800, then have that drop? Do you have a screen to share where maybe you could
Yeah,
show us
I
what on
want to
your
show you
charts?
something.
Yeah.
Actually, I was writing down here to ask price where you buy, and that became the last part of your whole statement here. And I want to show you how I almost owe David this little technique that I've been using for the last week. And I'm seeing that it would have worked very well. Can I share my screen real quick?
Yeah.
Yeah, you should be able to.
Let me see if I can. There we go. Let's go with the share and go with the screen. Okay, good. Yeah, this is and it's the Fibonacci. Look at this chart. You're not going to short this anytime, until you get the signal. This is the
Exactly.
30.
Exactly.
This is the 34. This is the daily chart of the S&P. This is the 34 that I use as kind of a backstop. I won't take trades crossing. In other words, I won't take I like to take trades with the 34 at my back. This is the 8. This is the 34. And I like to, some people use it, there are different, some people use the 20 and the 50, the short and the long. The short gives you what's happened, the short impression. And as long as you can stay above the longer, I think you're in pretty good shape. But I wanted to show you this real quick. And I've been using it really even on an intraday chart. But here's look, I mean, you just get these swings. This is a beautiful, and even if you look at the shorter term charts, you're going to see the same rolling motion. It's just so beautiful. So, but where do you get in? How do you know when one of these rolling motions are going to be the correction and you pick it wrong? Wait for the dip like this. I used the Fibonacci retracement and waited for the high, of which it started to come down. Once we crossed the 34, this is actually one of our short signals right here. But when we cross the 8, then I know we've got a top. I draw my Fibonacci retracement, and when I get to one of these specific levels, and I'm looking for 50 and the lower level here, the 61, yeah, 61 point. Let's say I'll call it 62. So the 50, and when you see when you start to see the tails, I mean, if you were doing this on a daily basis, looking when to get in a more general approach to the market, or you're looking to the way I use it, I'm looking now to prefer the long side again in the shorter term in the daily trading. I may use the next level down as my stopping point. And it's been working out fairly well. I mean, here again, nice movement
Sure.
where you don't ask for anything more than approaching the recent high. So you'll be taking your profit right here at this level. Here's another movement higher, and so we hit the 38 nicely here. So I would use the 50 as a stopping point. When you see markets this consistent, this seems to be a pretty nice way. And I haven't tested it, and I haven't really used the Fibonacci. But when David asked me to be at the presentation last week, I started to prepare. How would I use Fibonacci when I'm doing prop trading? And I'm thinking, this is an old process that we used to use back in. When I was trading money for Payne Weber. You mentioned electronic arts, right? Did somebody mention that before?
Yeah. Yeah, right.
EA, yeah. It used to be it used to be ERTS or something, but when it first came out. But I was there in 1989. That was like my first stock that we pushed at Payne Weber in 1989. And it was it just came out at $5. That stock. So
Wow. That's
so
a
that.
ride. That's a
Yeah,
ride.
that's been a heck
That's
of
a
a
ride.
ride. And so they promoted the right thing. But
Yeah.
I just wanted to show you this. So what do? I'm going with this flow, until I think it's a little long in the tooth, as Price alluded to, and as Sonny has mentioned before in the past, there's going to be a corrective action here to kind of shore up all these long-term gains. But this is what I've been doing lately. Just kind of wanted to show it to you.
And you might be a little more concerned if you started breaking the 34, and definitely if your 8 crossed over the 34.
Yeah, to see not only across of the 34, because you can, it can fool you here pretty easily. I like to see that second candle close below. I'm a 2 candle guy. In fact, when people ask me, well, how do you protect a big gain, I watch for two closes below the 8 in this particular example. Of which
Okay, below the 8, 2 closes below the 8, and that's when the flag you throw. Yeah,
right. That's when I drop the flag. As long, especially if we're on the other side of the 34. But I'm going to hear what Sonny has to say.
Yeah, no doubt about it. The good news today is I think we're getting 3 separate viewpoints on how to trade, and some of them are overlapping. But let's hear what Sonny's got to say on the Sonny bands and see if they're coinciding with everything else. So you want to stop sharing and sharing?
How about that? You got it?
Yeah, we're working on it. We're waiting for
I stopped sharing. So
there you go. You're up.
All right, fantastic. Yep. This is the ES, which is the E-mini S&P 500. And as they said, it just goes up and up and up and up and keeps going on up. And if I compress this scale a little bit, I've got Fibonacci lines drawn on there. You can see we've got a line up here at the 138% retracement, so extension. And I think that's where we're going.
So it's your 69, 57 area, something like that?
69.46, very close.
Okay.
And then I think we're going to have a pullback.
Okay, so you're and there are some reputable people who are looking for an advance and then a pullback from a higher level. So you might be in the camp of we are going to get a pullback, but it ain't going to be from 67. It's going to have a 6.9 on it.
That's right, and I think it's going to be a strong one. And it's going to scare some people who haven't ever seen a correction.
Yeah,
I don't know.
And the jobs number could cause something like this, or maybe a big earnings out of the banks.
Trump says is going to cause it. Trump can say, "Good morning, I had eggs for breakfast," and that could cause it.
Yeah, the price of eggs. That's always a problem. Sonny, the squeeze. I want to hear about the Sonny squeeze. I know that I always say hello to you with the squeeze, but I'm talking about the squeeze here. The bottom where the 2 averages. I want you to, because that really interested me about what you do, and I see it's kind of coming down a little bit.
Is right here, so it's already squoze, and it's going back up again because these are actually broadening a little bit. And we're going to continue on up to that next Fibonacci line. And then we're going to see how this high right here today is less than the high of a couple of 4 or 5 days ago. That to me says we're getting ready to do a little bit of a pullback down to the DMA, which is the dynamic moving average.
Where's that come in at?
It's the purple and gold lines that are right at
6,600 or 6,620? 6,621. Okay.
Yeah, 6,621. So we'll come down to that level, and then we'll pop on up, surprising everybody because hopefully the Fed's through talking now. They've been talking all day, every day. And hopefully they're all through talking. And now we're going to go on up on no news, good news, bad news. We're going to go up.
Yeah. And the move down towards 6620 obviously would also be a very false signal for the people who are dying to think that there's a correction coming. So it would kind of make some sense. You bring it down to 6620, everyone gets on the sell train, then you go to 6900, and then that's more of the time when you're really going to get a drop. That would be very interesting.
Exactly right. That's exactly what I'm thinking.
And the market likes to go the direction to hurt the most people, and that would probably hurt the most people.
Yeah, that would, because there are a lot of people sitting here at this
Yeah.
borderline expecting bad things.
Yeah.
And I
Yeah.
don't think they're going to get bad things.
Yeah.
Just
I mean, yeah, the pessimism, wall of worry thing's been going on.
yeah.
Yeah. Hey, Price, you have some stocks
Yeah.
that you are focused in on? Why don't we
Well,
go after some of your
yeah,
favorite
yeah. Well,
babies?
could I chime in just in one other
Sure.
thing to
Sure.
watch?
Yeah.
And if you're
Sure.
if folks are really worried about a big market correction, because I think that just Sonny alluded, I mean, when it hits, it could really surprise some people quickly, flush some people, go the other direction, as you alluded to, Jim, with surprise the majority. Look at the CBOE volatility index or VIX, and a lot of people say, "Oh, it's not relevant anymore." I love hearing that. By the way, whenever I hear people say that stuff doesn't work, when the volatility index is a measure of fear or lack of fear based on the options premiums off of the S&P 500 index, right? And so what's happened is that when we've had real problems, like when you go back and look at March and April, if you're going to go into another one of those just nasty 20% gut punch kind of declines, that volatility index is not just trending up, but it's surging above the 20 threshold. And so in the old days, I used to get worried when we had VIX where it's scraping down like it is now around 14 or go to 13. Back in the 90s, I remember going to almost 10, which is just incredibly low volatility readings. And you would say and right now you see volatility index has been low for months and months, and you'd say nobody's worried. There's this incredible complacency. It's actually healthy in now 35 years of looking at it myself, that when you see VIX stuck in a range between about the low to mid teens up to 20, that's a very bullish overall market environment. And you can even see going back before this flush down, you go back and look at last year. Sure, you had brief little spikes up to 28 back in 24, but they were quickly reversed. We were back under 20 in no time, right? It's where you start going above 20 and go on up. Back in that April surge, we went from 20 to 60 in a matter of basically a week or less, right? And so that's what you have to be careful of. If you're really saying, I need to protect my portfolio, I need to really worry about it, the next crash of 87, here we go, coming into October, I would say I wouldn't get worried until we start seeing VIX start surging above 20 and staying above 20. That's when probably more of my longer term hedges will kick in. And you say, oh no, I'm buying more expensive options. No, you're trying to protect against that free fall. And I remember watching on a conference, one of my friends, Alex Jacobson, who was a longtime CBOE and exchange guy, and he basically said that they imputed they didn't have the VIX back in 87, but they imputed that the VIX got as high as 600 intraday in that Monday, and that 20% drop in a day.
Right.
And so VIX in the 2008 period, it went up to about 90. And so basically, and during COVID, it also got up into the high 80s there in that March 2020 spike down in the market. So the point being that, yeah, you might leave a little bit on the table if the market starts to correct. And as Norm said, with all the breakages of the moving averages will start to be evident at that time. You'll start to see VIX shoot. If and when we get to that point, and we will at some point, you'll start to see VIX start shooting up. And that's what I'm kind of waiting for before I really start betting against the uptrend, because we really haven't seen the climactic kind of optimism like in the sentiment surveys like AAII, American Association of Individual Investors, still like 42% bulls. Right after the election last year, it got up to 50%. So we're not even to that type of optimism yet. And that's actually a sign, like maybe what Sonny was alluding to, that we go higher still before we hit that kind of major concern point. But back to stocks. I mean, the first stock that I've been trading a lot and I think deserves to be talked about is Tesla, TSLA. And everybody, they have their order delivery information coming out this Thursday, and yet how many cars are delivering or recently not delivering? Their trends have been down on the electric vehicle sales, especially in Europe. The stock has rallied like a champ because there's this negativity about Elon Musk, negativity about the company from the media, and it seems like everybody wants to throw both the stock and Mr. Musk under the bus. And yet Musk just recently bought another $1 billion worth of stock here a couple of weeks ago. And it's really interesting. Insiders only buy for one reason. They buy because they expect the stock to go up. They sell for a lot of other reasons, and that's why you don't worry so much about Bezos selling, Gates selling, now Jensen with NVIDIA selling regularly because they're just estate planning basically with their big gains. But Musk is buying the stock. There's a ton of negativity. Yes, it has those old highs that we've got to deal with, but it's really been a phenomenal case of, I love to buy stocks when they're quote unquote out of favor by the masses, and you get the technical price action that says it's not being valued as an electric vehicle company anymore. It's being valued as a robotics play, as basically people
That's
betting
exactly what it is.
that Musk wins the robotics war. And when there's a robot or many robots in each of our homes, not to mention the corporate commercial uses, that Musk is an even bigger winner and hits to that $1 trillion net worth, even as he's the richest person in the world currently. So I'm curious what Sonny and Norm have to say about Tesla, because it's been such a controversial name.
Well, I
It's had a
think
big run, so
certainly
Norm.
going up to the one. What have we got? 483 at that previous high in December.
Right.
I think we're going there. Going to test that. Now, I don't consider Tesla to be an investment. I consider it to be a tradable. So it goes up and it goes down and goes up and goes down, and it's over and over again. So I think we'll get to that high and then come back some.
Yeah. That RSI, what do you guys think of that? It looks like it's actually getting weaker as it goes higher.
It's exactly what I was going to ask Price. Of course, as a technical trader, you're going to lean a bit towards Sonny's test of the December high back there. To me, the RSI looks like it's having difficulty because of that expectation. Possibly, they know there's going to be some possible resistance there. So I think I'm not sure. If this was Carolyn Borodin, who we all know, she would probably draw a line through the top of those 3 RSI points, and be a little bit concerned with if I remember one of her courses correctly, and I hope I am, that there may be some hesitation at least here, but from
go ahead, Norm.
I was going to just mention from a fundamental standpoint, Musk this is why he's so great. He's already stopped looking at the electric car. I mean, look, everything's going downhill. The $7,500 credit is going, and we are now moving toward hydrogen powered cars, which is part of why platinum is having what it's doing. Again, that futuristic look. Even though catalytic converters, where platinum works well with, is needed for, is fading because of the internal combustion engine. Now you have a new impetus with the upcoming hydrogen. So it's a lot going on with this Tesla stock that you've got to consider. But to not consider the genius of Musk during all of this, I think you're missing a giant piece.
Yeah,
I agree. And maybe we segue over to the metals on that, because I agree with Norm. I've been trading the metals a lot. I mean, we can talk about stocks, or we can just look at the GLD, which is another one of my favorite options trading vehicles, which, it's just so liquid. It's so clean. Obviously, it tracks gold bullion on GLD. Or we can look at GDX as another ETF that's the big gold stocks. But basically, GLD has been just truly golden, pardon the pun, but it's been such an almost, I hate to say anything's easy, because trading is not easy. But when you're trend following and you're seeing this type of clean breakout, I look at some other things in addition to moving averages. I'll look at like an 80-day Bollinger Band with 2 deviations. And it's amazing when those things start to go outside of there. And that's what we had happen there from that 311 entry point there almost a month ago. Is August 29th's close gave us the confirmation over the 80-bar Bollinger with 2 deviations. And that last move that happened back there about a year ago, similarly, they last for multi months sometimes with these kind of power surges. And like Norm said, there's a lot of reasons. It can be those actual, economic reasons of the uses of the various metals, or it can be the just flight to safety. When you see our big beautiful bill that went through, that's projected to add another 4 trillion, give or take a trillion, to our national debt, that
Right.
people are going, hey, what are the value of our dollars actually going to be worth, not just in the future, but very soon.
Yeah.
You go just about anywhere and you see the food prices going up. You see all kinds of prices continue to ratchet up. I mean, everybody says inflation is under control. I disagree, and so I think that's what gold. People are looking for those safe havens, and gold is certainly a safe haven, but acting like a growth stock, growth sector. If I ever saw a beautiful trending story like that, and I'm not into projecting eventual price points. Sonny, you're much better than that than I am, but I love riding these trends until we see some kind of a climactic kind of blow off gap up that then fails. That's right now not happening. They're holding its gains beautifully. What do you think, Sonny?
I think steak is the next gold. I went to the market to buy a steak the other day. It was $104 for a 1 pound steak. So I'm buying steak now.
Wow. Love it. Bull market for sure, right?
People are getting used to spending a lot of money and not even know what they charged. I went to the Yankee game over the weekend, and I went up to a guy, "What did you pay for that beer?" And he goes, "I don't know. I put it on the card."
Yeah.
And I think that's the attitude of people is they're going to pay the prices, they're going to put it on their card because their portfolios are up, their jobs are there, they're making good money, and they're just going to pay the money. So I think the inflation is going to be very substantial looking forward.
There's a
Look at
lot
I,
of
I
people
found
really hurting.
I found cattle futures price.
look at these
See
charts.
There you go.
That's the price of steak right there.
Yep.
Yeah.
A lot
You
of
know,
extended markets, though. I mean, let's be honest. You got Tesla way up there near 500, 450, 500. You've got this thing way up there. The gold price is at 38,000. So there's a lot of charts that are getting. Let me call it getting very far away from shore. And reversion to the mean. You guys are definitely old enough to know that happens, and it's going to happen. And the question is when. Now, it's not going to happen when it's making new highs, obviously, but you'd have to be a little foolish not to think that the further away you get from those moving averages, the less risky the market's getting.
if you go
That's
before,
true.
if you go before I do, option professor, on your stone, I'm going to put reversion, and he reversed.
Oh,
He reversed to the mean.
Yeah, I believe in that because it's also a great way to make a lot of money with only a little bit of money. Because those options on the puts get awfully cheap when we're on top of Mount Whitney, and also because it drops faster than it goes up. I mean, it's nice to buy a call on the cheap, but when something's in the toilet, it's hard to get people to pull it out of the toilet. When it reverses from a high point, there's a line wrapped around the block. Who wants to get out?
Yeah. Well, who wants to put their hands in the toilet?
Well, there you go. I didn't want to give you that visual, but you get the idea.
There's never been
If you don't
Exactly
look up Lululemon, Target, and Chipotle, and you get the idea what the toilet looks like.
They haven't been in the service, Sonny.
I have not done that.
You're a bad boy.
Jim, I think you're onto something though. You mentioned Lulu and you mentioned Target. I mean, there will be time. You could look at any of those. There's time, right, when they break. It's not everybody thinks, oh, we're going to get like an instantaneous crash and I'm going to miss it. I mean, you can see, just like as Norm alluded to, the moving averages rolling over, crossing. There's loads of bearish opportunities on those names when the trend changes. So my view is I agree with you, Jim, on a variety of fronts. I mean, you look at historical valuation measures. We've crossed Warren Buffett's 200%. The market capitalization as a percent of GDP is now over 200%. That's a record. We've got the CAPE ratio, the cyclically adjusted PE ratio, is almost near 40. I think it was like 38.5, 39 when I last looked. The only time it was ever higher was the end of 99. It was only 30 back in the late 20s before the late 20s crash. So there's enough things out there, like you said, that definitely you don't want to be all in. And to me, that's why I think it's a great time to be a trader rather than a long-term investor. Because if you're a long-term investor, you're going, I'm supposed to buy and hold up at these valuations. Are you kidding? I'm holding my nose going, I don't like my risk reward on that long-term buy and hold. I'm going to have a lot of sleepless nights versus as a trader, you can say, hey, I can be in and I can be back out. I can define my risk. I can hedge. I can do all kinds of things. And so to me, like for folks, I think that's also Jim, you alluded to it. Like it's like you need to learn how to trade the downside on a small scale, even if you're using some intraday charts and some stuff where you catch some short term rollovers and you kind of just get comfortable with what that feels like. Just getting comfortable with able to trade a put, or I personally never would short a stock when I can buy a put or do a put debit spread or something like that. Why would I ever have unlimited risk on a short stock? I don't. But basically, the idea is that getting comfortable with that. I traded Match.com last week briefly on a little intraday breakage, caught it for a quick pop, and then they took I took half of my trade off into the close, and then they stung me on a bounce back the next day, and so I ended up only making a little bit of money on MTCH. But it's that reminder. I did that almost just as a reminder, like, oh yeah, that's how we trade a put. That's how you can get bearish exposure. That's how you don't get locked in to everybody talking bullish, everybody saying AI is going to carry us forever. It feels a lot like the late 90s in a variety of ways, and now betting with these massive investments that are being made on AI build outs of facilities and saying, is the demand going to be there? Is it really going to drive that much extra value creation? I mean, we all remember that, yes, the internet was a game changer for the economy at the end of the 90s. But if you go back and look at the Amazon chart, I'm not talking about pets.com. I'm talking about look at the AMZN chart from back at the end of the 90s, beginning of the 2000s, and realize that you could have been right about Amazon for the next 25 years, and you would have still had to endure something like a 92% drawdown from high to low. Through that early 2000s, just absolute take everybody out to the shed and say, if you're a money manager, could you stomach a 90% drawdown? That's like cardinal sin number one, right? Is like to be around for that. So the big thing is that I'm not saying that we're going to have all that same kind of pain, but there will be pain along the way at some point. But the idea is that you've got to figure out as a trader, how am I hedged, how am I protected, and how am I always at maximum flexibility to not be locked in with a view in my mind because of what's done me well before, and say things can change in a heartbeat. So I think it's just that's why I think everybody's saying here that yes, the trends are up, but that we have to stay flexible and we have to be ready for some shakedowns and know how to actually take advantage of it, or at least be protected from getting too much bullish exposure and thinking I can keep buying the dip indefinitely. When those trends roll over, don't get caught being a dip buyer.
And the difference is on a monthly chart, Amazon goes down in 2021 and it goes down and down and down. You can go shorts, you can do puts, you can pull out and wait, and then it goes back up incredibly after that. That's being a trader, not an investor.
Yeah. Is Amazon being affected because there's a big shift out of cloud, or let me put de-emphasizing cloud and SaaS, and it's all going AI and data center stuff? I mean, is that one of the weights on the stock, I think? Or what do you think? Norm, do you have an opinion on all Amazon?
I think, everything moves in cycles. I think the AI bloom, it's not quite off the rose yet. It's going to be continuous upward pressure, but I think they're already talking about using much too much energy. They're finding these black sites of computers that are just sucking up all the energy and a city's worth of energy in one small area. So there's going to be some give and take. I think you've always got to look ahead, like the robo cars and even though that's really front and center in the news right now, but we're talking about hydrogen fueling. These are the kinds of things that I look for. I mean, if you look at even when Trump was negotiating with Ukraine, he didn't talk about anything other than the minerals that he wanted from Ukraine. And everything is recently is about the minerals, the metals. It's almost like there's something going on that that's going to require these rare metals to succeed
rare earth,
in something volume, rare earth stuff. So I really like my concentration now in the metals. And when Price talks about watching these it's very hard not to want to be in this uptrend when that's all you hear about. And when you look at a chart like we're looking at, I think this is the importance of a certain degree of diversification, in your IRA, not in your trading stuff. But I think you got to have some metals in there now, even if you've been afraid of them in the past. Even 5%, can take the edge off
something in there. Yeah.
Something. That's really what I urge people to do.
Well, the
Can we
question
throw up
also
can we throw up Oracle real quick? ORCL. The stock's just gone about almost a 20% drop since it had all that great news, and I'm just wondering, is this just a garden variety reversion to the mean, or is it something where these data centers that they're involved in may have some energy problems or something? I don't know. But
it's
that's
not down
that's
to
a good
the
size pullback,
attractor
right?
yet. Jim, it's
Huh?
not down to the attractor yet that lies
Okay.
260.
I gotcha.
So we got to go down to 260 before we
Yeah.
close that gap.
That's a
You went
classic
up.
example of why you don't want to chase price movement. That's a good. That's a
That's
good.
right.
Yeah.
That's right.
Sonny?
But if you think about it, you had like a similar gap up on Microsoft on the last earnings report where it went up like 10% and then it caved that 10% back. And so then you see that was what looks like to me, a pretty healthy pause back to that shorter blue moving average there. And so obviously what we were alluding to earlier, like whatever Trump says, is it good or bad? And I think that's what I'm always saying is that you've got to, I don't know if what Trump says is going to be good or bad for the market. You have to look at what the market does in response to what you thought it would have done, right? When we bombed Iran, I thought, oh boy, this could really open up the floodgates on the selling, and we gapped down and then we close higher on the day. That tells you we're in a bull market, right? When you have that type of a recovery off of what theoretically could be viewed as a really start of World War III event or something, it's like that. That's what I'm always. So when you mentioned, Jim, the earnings coming up, right? The banks have been a phenomenal sector this year. I mean, look at just Citigroup, ticker C, or JP Morgan. I mean, look at C. I mean, in the old days, it was only JP Morgan that I would trade, but you look at Citigroup there and look at what a beautiful, steady chart it's been. I mean, obviously, I'm not saying you just go buy calls blindly in front of earnings, but what I'm talking about is once the earnings start coming out on these names, if they continue to rally, like Citigroup actually led the last July wave, it led on the positive reaction. JPM and Morgan Stanley were a little bit dicier, actually. And so I love to see what's the leader, what's going to act the best after the earnings. Because if it keeps going up after that initial gap up, so don't just measure it from the prior day's close. Look at where it opened on the gap up on a good news reaction and say, do we keep going higher after that open? If we do, especially into the close, and especially then the next following day, it tells you that institutions don't have enough of that stock. They want more. Because let's all face it, the institutions, not us as individuals, the institutions are the ones that are driving these markets. And so if they're underexposed to a name, they keep buying more. They can't buy all of their new position all at once, or that'd be like the 800-pound gorilla jumping in the baby pool, and splashing all the water out. It's like, you have to basically tiptoe in if you're a big institution. That's why I believe trends like the Citigroup trend last and last and last, because they're continuing to build exposure. Because the thing that institutions have that are like you and me and everybody listening and watching is that they want more of a good thing. When it's working, they want more of it. When it's not working, they want less of it. And so that's why you'll see these trends almost become self-fulfilling to a degree. But you've got to watch the reaction after the open, right? I see a lot of great looking, you mentioned Oracle, Jim. You see a lot of great looking gap ups and then they don't follow through. They just get sold right away and they come on down. And I say, I think I'll wait. I think I'll pass. There's no value to buy that dip until I see that we're clearing on through where that initial earnings or other news driven high was.
And on Oracle, we have two gaps. We have one from September 9th, and then we have another one 3 days ago.
Yes.
Both those gaps have to be closed.
Yeah, going down to 260 looks pretty reasonable. Yeah.
Let me ask you a technical question, Sonny, since you were weaned on technicals as a baby. And you're very good at, you're always coming. And this thing, I've heard you say it several times when we've met here on this show about closing gaps. I'm looking here at a jump here in Oracle, the latest one. Now, where is the close? Is the close at that recent high, or am I closing it at the point where it took off? There are 2 points there that that different technical people would consider closing the gap. Are you closing the gap with the most recent trade or with that recent high?
I look at the worst price. So right now we're in a gap from 3 days ago. And the gap went from, and you know what? I don't look at the wicks. Wicks are algorithmic trading. I look at the body of the candle. So we're going from 307.
You want to share your screen, Sonny?
I can do that.
Yeah.
Okay. You should be able to now.
Then we can speak your language.
I doubt it. You see it?
Yes,
Right
I
now
see
we
it
do.
now.
Yep.
All right. So the most recent gap we have is this one from here to here. It's a small gap compared to this one from here to here, but it goes inside that prior gap and it's working on getting down to it. Now, the attractor, I call attractors the confluence of price activity. So right here, preponderance of price activity. We've got an attractor that goes right across there at 259. So that's where I think we're going, is right down to close that gap at 259. I don't count this as the gap.
Okay, that's what I'm going to ask you. I mean, I always
Mhm.
tell people go with the, when there's, I mean, here you got a baby gap from 3 or 4 days ago. You got a gigantic gap. Which gap are you closing? Where should I go? I always tell them to go with the largest set of candles.
Yeah.
I'm looking here, and the preponderance. You're looking at red. So I think you got to lean. Yes, you mentioned the candle 3 or 4 days ago, and eventually, when we come back and test these double high, that gap is going to be closed. But I'm going to ignore that gap and look at the other.
I have a function in my easy language code that's called almost equal, because sometimes you get really, really close to one of these goals, but you don't quite get there. So that's almost equal. So what the gap I'm looking for is from this line that I'm showing right now up to here. So we're going from 282 down to 255. And I don't go to the candle that the gap was on either. I go to the prior confluence of prices.
It's interesting that you say almost candle. I did a presentation on limits the other day because I think people don't use limits like they should. And and in prop trading, where they count the loss of open trade equity against you, limits are almost required in most of the trades that you make, because you're catching the trade at its highest open trade equity, and you're padding your distance from that red line that people fear. So when you talk, but my point is that if you set and I'm commenting on the almost comment, when you set a limit and the market goes toward that limit price but hesitates, you're 90% of the way there, and it starts at, just take it.
Right.
Don't you can't ask for
anything more.
The more you ask for, the less you'll get. And when you're given the 90% of it, to ask for the other 10% is ridiculous. You're there, you made the trade, take it and go on to the next trade. So don't let limits rule you, but use them as a guide. Use them as a guide, because really what happens is sometimes the market can spike up and spike right back down on a daily basis, and you're going to grab when nobody else did. So limits are important, but when you get to if something is coming to it and hesitating, take it there, cancel the limit, and go on.
Yeah, and that's why I say almost equal. If it's close enough, take your profit.
Yeah, so true.
Okay, guys, I want to get into something before we run out of time, and it is crypto, and it's particularly on two stocks, MicroStrategy and BitMine. And I wanted to look at the chart on crypto because Tom Lee obviously has some following, let's call it, and he's looking for 200,000 possible on Bitcoin and 10,000 on Ethereum. So these two stocks, obviously, but maybe people listening don't know, they're treasury companies in that they take their cash and they borrow money and they buy all the Ethereum and the Bitcoin they have. And they've lost a lot of ground because the value of their crypto versus what the stock price was a huge premium. And guys like Jim Chanos were shorting them, and that premium has dissipated. So if we're going to 200,000 or 150,000 on Bitcoin, and we're going to go up on Ethereum, is there value in these two stocks now? So I thought we'd put the stocks up, and then we'd go around the horn and get a little feedback on do you have any belief in this crypto story, or and B, do you think these stocks have merit? So you want to go back to David's chart real quick, and then we'll scoot over to you when you come up, Sonny,
Okay.
so
What's what's the symbol, Jim?
Well, like I said, we're going to use David's chart to look at the stocks, and then when you come up, yeah, there you go. So when you come up, you'll come back in and show your chart. So let's start out with MicroStrategy MSTR, and and BMNR is the other one. Price, do you have any feeling on these two guys? Because this could be the big story for the next 3 months, don't you think?
I think you're right. I mean, I have some concerns about what they now call strategy MSTR, the old MicroStrategy, of that. Basically, you're paying like double if you believe in the Bitcoin move that you're mentioning, Jim. That my view is I'd rather buy Bitcoin outright, because I feel like you're paying about double that for MicroStrategy, and it's like, are they really that much better run than just buying Bitcoin? If their whole strategy is to keep issuing more convertible debt to buy more Bitcoin. So they've put more and more of the weight on buying Bitcoin, and I'm saying, if I think he's right, Michael Saylor is incredibly, he was the first one there, right? He was basically the guy who created this whole strategy that everybody's now trying to copy. But because of that, you're paying double the premium for the stock, and so to me, it's an expensive play, and I can see why Jim Chanos is playing the hedge of buy Bitcoin, short MSTR. And so my view is that on the other one, BMNR, like you said, Tom Lee is the chairman, if you will. They just announced today that they've acquired 2% of all Ethereum out there, and their goal, of course, is to get to 5% holdings of all Ethereum out there. So they're making progress. Even more significant than Tom Lee heading up the company is that Peter Thiel owns something like 8% or so of the stock, and that's why it popped crazily back there in the summer, where it went from nothing to over 100 in a matter of days, right? Because they're going, what does Peter Thiel know? He's the guy behind, the kickoff to Facebook, the kickoff to so many other big tech names. I got the chance to
PayPal.
Of course, PayPal. I got the chance to meet him when he was in the Fox News green room in New York. He had just sold his stake in PayPal and created his, I think it was, what was it, Clarium Management or whatever they called it. But basically, I wish I'd gotten a piece of his fund at that time. I don't think he was selling any. But anyway, long story short, I think BMNR is a fascinating story that if it can get going through those recent highs, I traded it on that first pop from the third. I sold it too soon. When it came off that blue moving average on that first retracement off of 100. I traded it from about 35 and I sold out at like 43 and thought I was so smart. And then it went to 70 like 2 days later. and so that happens all the time with these stories, right? Is that you have to get comfortable with taking your piece out of it. But clearly, if it gets through that 70 high, it's got 100 potentially written all over it. To me, that's much more interesting as a long-term kind of a you see the triangle happening there, right? Higher lows, lower highs. Those triangles can lead to big breakouts. So I'm much more interested in that one than I am in MicroStrategy as a potential bullish trade. That's my 2 cents.
Are you looking at the longer term vertical calls so you can sit on it and you have some offset of the premium and just kind of sit there like Buddha for a year out or something like that? Maybe
I wish I had your patience, Jim. I'm actually looking. I believe it or not, I look at 1 or 2 weeks out options. When it starts to go on my hourly chart, then I go ahead and I buy the in the money. I did that on that last little pop from 50 to 60. I bought the in the monies and I sold the out of the monies. They went in the money too far, but I maxed out my gain and was happy to take the double and call it a day. So basically that's that. I'm not necessarily expecting to hit 10 baggers, but if you can stack those 20, 30, 50% occasional doublers and keep stacking them and then control your risk. That's what the debit spreads do for me, is they give me that hedge. So basically, and a lot of the expensive ones, you can cut your costs down by oftentimes half or even more than half on these weekly options. But when you buy in the money and sell at near the money or slightly out of the money even. So I know you've had experience with that too, I'm sure.
Yeah, well, the only thing the longer term does is if you in lieu of buying the stock, and it gives you leverage. So those are the only 2 things. You wouldn't do it as a trader. You don't go out a year out and start doing trading. You go out there and sit there like Gandhi. You know what I mean? Anyway, Norm, any gut feeling on these two guys?
First of all, there's nothing wrong with Gandhi. Secondly,
I forgot I had my spiritual leader on the phone here. I forgot that.
God bless you. May the universe be with you. But I just, when short term, I'm just going to listen to price, whatever he tells me to do with the Bitcoin.
Yeah,
But
yeah, yeah.
I will say that I went for a haircut the other day and they wouldn't take my credit. They wouldn't take my my cash. I had cash for some reason.
Yeah, I've had
And
that happen.
they only took credit cards. I went into other places in Sweden. They no longer take cash. Everything is going electronic.
Yeah.
The dollar, since we got off the gold standard way back when in the 60s, I believe, and we've been on a fiat currency. It's already, you see the weakness of the dollar. I really don't see it coming back to any great degree because we're just substituting it with these electronic
Electronic
currencies.
payments. Yep.
Yeah,
Yep.
and I was 15 years ago, I paid $5,000 to sit in a room. There was the head of products for Microsoft on the left and another guy here. And big time people. I don't know how I got in the room, but Ray Kurzweil was there along with Peter Diamandis, just two guys on a stool. They're both futurist type thinkers. And,
Okay.
and they said right there that Bitcoin and all of this is here to stay. And that at that time it was $25. I looked into Bitcoin ATMs at the time. But I decided not to do it. But I think Bitcoin was $25 or $30 at the time, something crazy. Anyway, they said it was there, and it's happening as they laid it out. The way now the institutions are getting, only old white men are against Bitcoin right now. That's the last. Those are the last shoes standing right now.
Or a
And
thinning crowd, or a thinning crowd.
everything. Hey, don't say. I don't mind. Don't say thinning. So I'm sorry, Bryce.
I was going to say, at least you still had hair to get a haircut.
All right, here we go. I got to listen to this now. All right. But no, the idea is that, if you, that whole world is getting stronger. The fiat currency world is getting weaker. And I just think that, that to take small positions long term and are the way to go so that you can stand these pullbacks. But over time, and as Price mentioned, things are happening much more quickly than they used to. Take 2 years for you to get the answer till you did the right thing. Now it's 2 weeks.
Yeah.
So small positions with high leverage, as we're all talking high leverage stuff here. Just be patient and deal small. It'll get you the results that you want.
But the thing about today's markets is we are really volatile. In 45 years, I have not seen this kind of volatility.
Yeah.
It reminds me of the late 90s when and that's about the only other thing you could say is that, and that it was taking a lot of market makers in the options market out of business because they were selling calls on E-Trade and Ameritrade and other tech names, and they were just getting blown out so quickly that the spreads just got really stupidly wide. One of the things I want to mention too is that you all probably saw the news item this past week that they're talking about getting the pattern day trader $25,000 account minimum down to $2,000. And that I believe is going to add a whole nother wave of interest in options. You talk about volatility now, I think it's going to add a whole nother wave of volatility. And also for all you out there that are trying to learn something like options and going, I don't want to have to put up that much money and have it at risk. Now, if you can say, okay, I put up a smaller amount, obviously I don't recommend ever putting all your money into any one trade. But if you happen to make a mistake that's damaging to your account, at least you could do it with a smaller amount of account rather than having that bigger account at risk. So I think it's going to be a great tool for newer traders coming in, and not just for speculation, but for learning and for kind of cutting your teeth at a small scale and then building as you gain confidence and gain experience.
All I can say about that is get out quickly when you're wrong.
Amen.
Yeah. Hey, Sonny, how about throwing your chart up? I'd like to know what the Sonny bands are saying about BMNR and MSTR to see if there's a fortune to be made in the next 90 days.
Well, here's
I enjoy fortunes. Yeah.
Here's MSTR.
Okay.
And this is a daily chart, and we've just essentially been going sideways for a very long time, since December of 24. I think we're about through with that sideways and ready. See this red horizontal line? That's the confluence of prices right there. So I think we're going. So we're currently at 326. I think we're going to 397.
Yeah. The getting back above 320 for me was an important number. So did it close at 326 today? Oh yeah, because it went up 5,000. I'm sure it got a bid. Yeah, I'm sure it got a bid. So that we might have seen the lows now, is what you're saying, right?
That's what I'm saying.
Oh, I like to pin you down. All right. How about the other one? How about BMNR, which actually is the better looking chart, as Price was saying?
BMN.
This BMNR, Bobby, Michael, Nancy, Robert. It
Okay.
doesn't have a lot of data because it hasn't been around that long, or
Yeah, it hasn't been. It was going
Can you go to a shorter term chart at all or anything like that?
Sure. 60-minute.
Yeah, let's go to 60s. Yeah.
So this, let me blur my eyes and look at this a minute. I think we're going on up to the highs now in this thing.
Yeah, good.
Yeah, I think we've got some move up.
And it's trading above your purple and gold, which is always a big thing for you, isn't it?
It is.
Yeah.
But the histogram, which is showing gold and red, that
Right.
red says momentum is waning. And so we could have some down move before it goes up again.
Okay, more chop.
More chop.
Yeah. All right. Well, we're getting near the top of the hour, guys, and I want everyone to know how they can get a hold of you. So we are going to start with Price Headley. And Price, you want to give a little situation on how people can get a hold of you? And if you have any special offers, this is a good time to kind of shout them out.
Oh, thanks. So our free insider access is on our bigtrends.com website, Jim. So basically just go to bigtrends.com and you can see there's a whole ton of products, but I recommend just sign up for the free emails. You get tons of free education, free access to all kinds of, a lot of interesting reports about candlesticks, about options, kind of basics, kind of learn what you might be interested in, whether you're looking for growth or whether you're looking for income. The beauty of options is they can be tailored to any kind of a strategy, protection, growth. They're not just for speculation anymore. So bigtrends.com is where to check us out and get signed up for the free insider access.
And you guys have been doing this for quite a long time, right?
Yeah, we're on our 26th year in November. So blessed to basically come in right before the top of the internet bubble and then guided people through that first 50% haircut in stocks. And then, of course, the 08. 08 was actually one of our better years because puts were the only game in town. That was before inverse ETFs really gained popularity. So that's why I say know how to trade puts ultimately as well as calls, and you'll learn how to, like you said, Jim, stocks take the escalator up, but they take the elevator down. So good to know how to trade both sides.
True.
Yeah. Okay, Sonny, how do people get a hold of you? And again, anything you'd like to offer out as a special idea?
Sure. I'm happy to give away a free guest pass. It's in the chat now to my live trading room every morning at 7:30 a.m. Pacific time, which is kind of like the crack of dawn to me. But I trade live for 1 hour in front of an audience. And let's see, this year's very disappointing. I'm only up 65% so far.
Oh.
And last year I was up 482% for the year. So I'm still working on it.
Oh, well, it sounds like you're doing just fine. And Norm, again, how can people get a hold of you? And you're helping people with many things. You might want to mention.
I'm focusing primarily on helping prop traders right now. But you see that black line at the bottom. If you just opt in for that 4-minute drill, that's where people knew me from. I give you right between the eyes for 4 minutes. I do want to mention something about options. I ran an option firm, a large one back in the 80s. But before that, I got my introduction in one of these high pressure telephone places. I didn't know the business, and they hired me. Boy, we'd love to have you. Spent about 2 weeks there. But the saying there was options are just buy a put or buy a call. All you can lose is every penny you put in, but no more.
Right.
And that's to some degree a comforting thing for people who are, looking at the futures market and other things. Of course, there are certain ways to defend yourself. I mean, I made a living literally on covered calls for years, just myself.
And when I tried it, I was really good at losing what I put in every time.
Yeah.
Anyway, I just wanted to, the one thing I wanted to say, if you want to go to the contact page and contact me, or just get opt in for the free reports, that was a stop I had in the platinum. In any event, the idea is if you go to the Jerusalem Post, Google Jerusalem Post Platinum article. They just came out with an article last week on platinum that explains the entire thing. Really want to get people excited. It's a thin market. So you got to be careful. You got to play small, but the moves are big. And one other thing, I'm talking about platinum, but for new people, you always go with the leader. and gold is the leader of this whole movement. I see people say, well, I miss gold. Let me go to, silver. Don't do that. Go with the leader if you're new. If you've got experience in trading, check out that platinum. I think it's got a lot of long-term potential.
Yeah, and you specialize in it for a long time, so people get some information from you. It's coming from
Absolutely.
a learned source. Okay,
Absolutely.
as far as Option Professor is concerned, we do have a very large webinar coming up October the 8th. So if you have an interest in learning about options and hearing how I go about buying and selling the options and risk management and all the stuff you need to know, it's October 8th, and you just go to my email, shoot me an email to optionprofessor@gmail.com, and we'll send you the link. Hey, Price, it was great to have you here. Hopefully we'll do it again because it was good.
Look forward to it. Thank you, Jim.
Yeah, you bet, Price. And then, of course, Sonny and Norm are repeat offenders. So
thank you. Great to have you, Price, on this. You're great.
Yeah,
Norm and Sonny, great job. I love doing it. Let's do it again soon.
Okay, guys. All right, back to David. Thanks a lot, guys.
All right. Yeah, great discussion. So thank you, everyone. Just a quick reminder, if you missed this, we had an excellent Fibonacci and Elliott wave trading strategies event last week. So if you go to TimingResearch.com, you can click on either of these posts, and well, as soon as it loads, it'll be the full archive of the 20 Fibonacci and Elliott wave strategies. I don't know why it's loading slow at the moment, but you get a list. You can see all the different presentations here. And then also, if you go to the main Timing Research site, the archive for today will be there as soon as I can get it processed. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can get the recordings that way as well. And I just want to thank my guests again for today. Price Headley of BigTrends.com, Norman Hallett of TheDisciplinedTrader.com, Sonny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com. All right. Thanks, everyone.
Thank you, David.